Hello, traders. Gary Wagner here. It is 11:30 in Honolulu, 5:30 in New York on Tuesday, 14th day of March, 2023, and this is the Daily Report for Gold and Silver. With everything that has occurred from the weekend to today, which is the banking crisis and today's CPI report, gold did trade lower, but it held the line. That key psychological $1,900 level has held, with gold trading slightly above it currently. The CPI report today showed that there was an overall decline from 0.5% in January to 0.4% last month, and headline inflation also came down from 6.4% in January to 6% last month. After 3 consecutive days of strong gains in gold, taking gold futures from approximately $1,825 to a high just above $1,915, gold sold off today fractionally lower compared to the $40 rises of yesterday and Friday, down $8.20, with the most active April contract currently fixed at $1,908.30. The high and the open were identical. The low is noteworthy, $1,899.80, which is 80 cents above our stop. So we are long April gold futures. The dollar is fractionally higher, but in essence unchanged, up 0.08%, with the dollar index fixed at 103.265. Lastly, silver declined by approximately 13 cents, 0.61%, with the March contract currently fixed at $21.79. Traders, we are looking at a short-term 240-minute candlestick chart of gold futures. We have our most current Elliott wave count. This extended long rally represents our third wave, and I believe that we concluded our fourth wave recently, about 5 days ago, and we can break that up in terms of a 5 count down: 1, 2, 3, 4, and 5. That would complete our A wave. Our B wave had a 3 count, which was 1, 2, 3, completing our B, and then a final C, effectively giving us what is known as a flat, meaning that A and C had roughly equal lows, although the C came in at 1812 and the bottom of the A wave was at 1810. We've had this nice rise. We've had a little bit of a decline, which could mean that we're going to go into our counter wave or wave 2. If we do, in best hopes, I would like it to fill the gap, stop us out in profit, fill the gap, which would be much lower, which would allow us to re-enter at a better price. And then, of course, we would have our third, our fourth, and then it would conclude with our 5 out of 5. My projections right now are looking for the fifth wave to go anywhere between about $2,000, 2010 is the 78% retracement, or just shy of 2,067. The primary 3 rules of Elliott wave is that wave 3 cannot be the shortest. It can be equal, and in gold, many times we have seen what is called an extended fifth wave. I've just pulled up a daily chart of gold futures. You can see today's activity represented by this red line here. You can see that the low that came in was just above our stop. We moved our stop to 1898.60 yesterday. Today, the low was 1899 and change, so we are effectively still long. If this holds and we see gold continue to track higher, we will maintain and move the stop up when or if appropriate. If we do get a corrective move here, it would of course stop us out, but our best case scenario, if that happens, would be to look for the gap between the action of Friday and Monday to fill. Typically, as a market technician, We look for backfilling of gaps. We do have a genuine price gap from the high of Friday and the open of Monday. On Friday, the high was just below the 50-day moving average, and then yesterday it opened just above it. So it is a true price gap. We would look to re-enter the market right in this area, which would be roughly $1,873. For now, we will maintain our current long position as well as our stop. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.